Hi and welcome back to Cheeky Crypto. My name is Nick, and today guys we're going to be jumping down into the world of Bitcoin, taking a look at those micro movements for BTC, what we think is likely going to happen next, and all that wonderful stuff. As I get into the video, if you find it useful and informative, smash the like button. I do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, guys, check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. Okay guys, let's keep this one nice and brief and to the point when it comes to Bitcoin. We're going to be looking at the hourly chart here today, and we are going to be paired up with USDT using Binance as our data source. These numbers that I talk about in this video will change depending on the pair and depending on the exchange that you use. I use USDT because it's one of the biggest trading pairs out there for Bitcoin, and I use Binance as it's one of the biggest exchanges as well. Okay guys, let's start things off. We'll take a look at smart money concepts and Elliott-Wave theory. Okay, so we'll start with smart money because it's actually quite a neat little graph with very little kind of noise on there, makes it a little bit easier to kind of start with, and then we'll move on down into the more complicated world of Elliott-Wave theory, and we'll explain what is going on with the recent structures. So let's take a look at what smart money concepts has to offer us on this 1 hour chart today. So as we can kind of see within this this chart, we've got a couple of things. We have a strong high, weak low. Let's start with these. These is basically an indication that it is unlikely that we are going to push up higher than our swing high, which currently is up here at 27,663. It's got a low probability of pushing up higher than that right now. We can also see that the weak low is basically driven just from a one wick situation, so it hasn't been tested, hasn't got multiple kind of retests of this area, and therefore it makes it kind of weak, as in we probably are going to come down here and there's a high probability that we do actually go down lower than this swing low. Okay, that's currently how that sits. Now we can also note that equilibrium is right where our price action is. In fact, it's right where we've consolidated down a little bit. Okay, this is basically a bit of a battle between the bulls and the bears. Essentially here we are above equilibrium, but we are below the 50 and 200 EMAs. The red line here, that is your 50 EMA, the white line is your 200 EMA. At the moment you can see that we are being pushed down on that 50 EMA, and the 200 EMA, which is slightly longer term, is also rejecting this particular wick right here. Ultimately it looks like the bears have probably got control at the moment, and therefore we want to be thinking about what's going to happen next. With that being said, it's going to be quite an interesting one over the weekend, as we are probably going to reset a lot of our stochastic RSIs. At the moment we are not in any kind of overbought oversold situation here on the right hand side, and this is on the closed position. So I'll bring this up here. Take a look at our inputs. You can see it's on closed. This is a default position of the RSI source on most stochastic RSIs, and so I use this one. It's not my preferred option to use it on closed, but it's there so you can see that there's nothing to kind of worry about essentially in terms of overbought or oversold, not at the immediate point of recording this video. That will change quite dramatically over the weekend in my opinion. We also want to be aware and keeping an eye on any potential divergences. For example, we can see that we have ourselves here some higher lows and some higher highs. These do have a tendency to break down, and at the same time as that is going on, we also see ourselves with the opposite here within our stochastic RSI. So it's important that we're aware of those divergences as well. Okay, so what else on smart money concepts do we need to be aware of? Well, we do see that we have these red areas. These are selling internal blocks, and there's another one up there a little bit higher, and we've got a little green one down here. This is for buyers. Okay, so there's a lot more selling on here than there is showing us with buying pressure, which is quite interesting, but for the most part it does look like we are still in our bearish structure. That hasn't changed, so everything here is still remaining bearish on our 1 hour chart, even though we had a little bit of a push to the upside over the last couple of days or so. So ultimately, smart money concepts here gives us the idea that things are still in a bearish state of play. So that hasn't changed, and we are kind of looking at breaking down still. We have change of character, break of structure, break of structure, break of structure. We've rallied up here, come down lower than this week low, we'll get another break of structure. Ultimately, I think everything is heading in that direction, but yeah, we'll see how things play out over the next little course here. Again, you've got a little minor change of characters as well. Okay, let's move over into Elliott wave theory. Okay, now Elliott wave theory we were tracking. Let me just zoom out of this just a moment so you can kind of see. It's reasonably complicated. So let me go ahead and try to break this down again in a more simple way, and then I'll try to layer this stuff back on. Okay, so I'm going to remove the little bits of noise in places, and we'll keep it like this. So this is where we were yesterday. Okay, we were looking for a move down to the 25,934 to 26,197. Now we actually reversed up from this range and created an overlapping structure with our wave 1 situation. So this basically tells us that we are not following the 5-wave impulsive structure here, and instead we're going to have to look at something different that's going to occur within this range. Now, ultimately, we are looking at this as a 5th wave movement, which will be taking us down towards 24,791 to 25,518. Now, in order to do that, there's a couple of different things that could play out. Let me find some empty space. So, we obviously have 5-wave structures. Most people will probably be familiar with these, covered a lot on YouTube, and it has some real basic rules. Wave 4, for example, cannot cross wave 1. Okay, so that overlap between wave 1 and wave 4 would invalidate the idea that you're in a 5-wave movement. Wave 2 is not allowed to cross the origin of wave 1, and wave 3 has to be 1.618, and that's up for debate depending on what literature you use. I use purist data, and I say 1.618 is a minimum expectation of a wave 3, and then you got 1.236 to 1.618 for wave 5, right? And that's a real basic 5-wave structure. However, when it comes to the 5th wave movement in itself, this one right in here, there's actually several other options. So you can have a 5-wave impulsive movement like this nested inside that 5-wave, that 5th wave. Okay, that's possible to do. Alternatively, you could also have what would be an ending diagonal, which would basically be a structure like this, where you do have an overlap within wave 1 and wave 4, and the internal workings of all of these waves are 3 waves. So in here you'd have 5, 3, 5, 3, 5, and in here you'd have 3, 3, 3, 3, 3. Okay, and that would be your ending diagonal. Then you have what would be called a contracting diagonal, a big wave 1, wave 2, wave 3, wave 4, wave 5. Like this, and what that would do, I'm not sure if I've drawn that right, but we'll see. Again, I'll probably have to bring this wave 2 down just a little bit in here, and then a wave, I'll bring this in, I'll actually have to bring that more like this. So you'd end up with something that would look like this. And this particular one would contract down. Wave 1 would be the biggest wave, wave 5 would be the shortest wave, and so forth. And again, you'd have those overlaps. Then you'd have the opposite of this, which would be an expanding diagonal. Okay, shorter wave 1, wave 2, wave 3, wave 4, and then a big wave 5. Okay, and this would look like this. And again, what you'd end up having here is an expanding movement. Yeah, I should draw this on. So draw these little yellow lines to help kind of demonstrate. Okay, and so you'd end up with this one. Okay, so all 4 of these possibilities could sit inside this final 5th wave movement. Okay, so overall it's 5 waves. That 5th wave could be any one of those there's 4 different structures inside there. Now, what happened yesterday is it narrowed our options down. Okay, it meant that this particular structure is no longer possible. Okay, it's no longer possible to have a 5-wave impulsive movement inside our 5th wave. So we can knock that on the head and say that one's not likely to happen. Instead, we're now presented with just 3 different options, or 3 different things that could play out within our 5th wave movement. Okay, so now we know that, what we can do is we can come down into here and we can start plotting out what the most likely thing is going to be within this structure. Okay, so we've had a bit of a move to the downside here, and we invalidated the idea that this is a wave 3. And, you know, for the most part, that's a good thing. And so it allows us to kind of say, okay, well, if we're going to get down to our targeted range, how do we do that? And so it's going to be one of those. And at the moment, we have a really short wave one. And so therefore, it's not likely to be the expanding. Can't rule it out yet because we could still truncate, i.e. we don't hit our target, but we complete that diagonal. And so therefore, we have to kind of consider ourselves in expanding or ending diagonal structures. And at the moment, I think the most common one that we should be thinking is ending diagonal. So we look for 3 waves. So what we've got here is we've got an A, B, C coming down. We went up into our typical kind of wave 2 retracement, nothing terribly too unusual there. We've come down here in a wave 1, up here to a wave 2. Do we come down into a wave 3? And if this is the case, I still want to be targeting out to try to hit, and I'll show this on here. We grab hold of that. Right over here, we still want to be targeting out 25,733, because that will allow us to kind of look at that. And that's probably even arguably also because we actually have to think about this. We've got the wave 2, which is an irregular flat. Our wave 1 is actually shorter, which probably actually means that we don't have to go down as deep. Yeah, so we only really have to hit 26,200 in order to kind of get that wave 3 minimum expectation here. But our next expectation really should be this next move here. So if I take a look at this, we have the possibility that we can come up a little bit higher on the B wave. That's fine. But if we just take the existing high and we run this over to here, then we should be thinking about 26,000 or just short of 26,000 at 25,791. Essentially, I think that we are likely to see a move into that little range, and then that will allow us to kind of finish off our C wave structure for our wave 3. Okay, so if I draw this out, I'll draw it in a really neat way, even though we've got the irregular flat there. I'll draw it as a wave 1, wave 2, wave 3, up here, cross and overlap with wave 1, and then down into that final 5th wave movement. Okay, and so if we're going to touch into our actual zone for our 5th wave move, our final 5th wave move, then we want to be on the higher end, I think. So around 25,400 is probably where that's going to end. So let me just draw this out. Okay, so now we have an understanding, and hopefully you guys have followed along with what's going on here. That would basically make that a wave 1, this a wave 2, all of this is our wave 3, up here for our wave 4, and the diagonal as our wave 5, and that would complete our 5th wave movement. We'd then be able to see, okay, well, all of that is going to be our wave 3 from this structure over here. Okay, and we can nest down again. We have a wave 1, we have a wave 2, all of that is our wave 3. We come up into our wave 4. Okay, we will not overlap with wave 1. Okay, we should not overlap with wave 1 here. And then we come down into another final 5th wave movement. And then all of that gets wrapped up again as this is a wave 1, this is a wave 2, all of that would be a wave 3. We come up for a wave 4, we come down into a wave 5. And when you have that, you then have yourself a perfect, and this is not yet confirmed, but a perfect move or starting move of reversal to the downside under a impulsive structure. Could of course be zigzag, but with the amount of structures that are going on internally here, it would lead me to kind of worry that actually there's a significant move to the downside. Now, it wouldn't happen until after you've revisited the 29 to 30, maybe 28, 29. I'm going to give it quite a broad range because we don't know exactly how high this is going to go just yet. But I'm going to say between 28 and 30k seems to be the area that you'd have to revisit before you had another really significant surge to the downside. So there's a lot of things that are quite complicated about Elliott wave theory. It's something that if you apply correctly is going to be incredibly accurate, but it's open to a lot of errors because of its complexities. I did create a course on this down at 𝗕𝗘𝗪𝗀𝗠𝗪𝗀 linked in the description below if you're interested, and the same with smart money concepts. It's one of those people will try to apply it, and applying Elliott wave theory is the hardest part of the entire thing, so got to bear these things in mind. But it is what it is for now, and we'll keep an eye on it and we'll see how things kind of develop. I'm going to just kind of remove some of the noise, keep it like this, and then just zoom back in here for a moment. So Elliott wave theory has us, pretty interesting stuff going on. Now we do see, of course, what's going on with our stochastic. We kind of looked at that, and we can see here we have hidden bearish divergence coming up in here as well. So interesting stuff going on when it comes to our divergence indicator. As I said before, we do see here higher highs and higher lows, which have a tendency to break on down, while simultaneously pulling down our momentum indicator, showing that actually things are not necessarily what they seem. So we're going to be keeping a close eye on all the structures and everything that's going on with Elliott Wave, but also what's going on with smart money, and see if these two things usually come together and give us a kind of confirmation of the direction of the market. I'm going to leave the video right there though, guys. If you did find it useful and informative, smash the like button. I really do appreciate that. If you are new to the channel, then why not go ahead and subscribe. Don't forget to join us down in Discord, and guys, I'll catch you all in the next one.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.